Now, next, I know there were some questions about RAM and the RAM fee, so let me kind of go through RAM and explain RAM to you all. Sean, did Mike touch on RAM at all?
Pretty much just a product launch stuff.
Okay. So RAM. RAM stands for Reliant Account Management. One way that we separate ourselves from all of our competitors is that we utilize a third-party FDIC-insured bank account for each of our clients for them to make their fee payments into during the consolidation process, meaning that we work on a performance basis, meaning that the client is guaranteed to get the work done, or they can close the RAM account and take their money back and fire us if we're not performing. Okay? No other company out there is going to do that for their client. All other companies collect all their fees up front. It goes right into their bank account. Whereas we collect our fee in phases throughout the consolidation or rehabilitation process, depending on what program the client is going through. Now with RAM, every month that the client is enrolled into our program, they charge a $6.95 fee. $6.95, not $695. So don't scare your clients, okay? With that being said, $6.95. That is going to be quoted in the monthly pitch to your clients when you are quoting them the program. So for instance, if you have a client that is going into a consolidation program to consolidate their loans, their fee is going to be a total of $6.99. Most clients are going to pay that fee, from what we found in the past, over 3 payments. It's just easier for them to afford that way. So that means they have 3 months of RAM. So instead of you telling that client that their 3 monthly payments are going to just be $233, which is what our fee would be divided by 3, we're going to tell them it is going to be a total of 3 payments of $239.95. And that will include the $6.95 RAM account charge for the setup of the account while they're going through the consolidation process. So essentially, whatever our fee is, however many payments that they are breaking it down to, whatever that monthly payment amount is, you are going to always add $6.95 on top of it. Any questions about that?
But the CRM doesn't calculate RAM.
Yes, you are correct. The CRM does not calculate RAM because it is not our fee to the client, which is therefore why it is not calculated in the CRM. The $6.95 charge goes to RAM. It doesn't go to the company, doesn't benefit us in any way whatsoever. So therefore, in the paperwork, it is going to show our fee of $6.99 broken down into 3 payments of $233. But again, it's just important that you go over with the client that the total monthly fee is going to be $239.95 rather than $233, and that includes everything, the RAM account setup, the consolidation, and everything we're doing to prepare all the necessary documents to file and process their consolidation through the Department of Education. Does that clarify that, or are there still any concerns about the $6.95 RAM fee? Okay. Now, just to touch on RAM again, this can also be a huge selling point for you because, like I said, all other companies out there do not offer a third-party account for them to make their payments into, okay? Which, again, these other companies don't work on a performance basis model, and they are collecting the client's money with no guarantee that the work is going to get done. Whereas I mentioned with our program, they have this dedicated third-party FDIC-insured account that is set up in their name for them to make deposits from their checking or savings account each month into this RAM account, which secures the client's money and everyone else's money and ensures that the work gets done for the client. Otherwise, none of us get paid. So we all have to do our job at the end of the day. Obviously, as long as the client is making their deposits into RAM. So, any questions about RAM? Okay. So that's RAM in a nutshell. I want to go over forbearance a little with you all as well, because in our sales pitch in the script that you have there, we advise clients that we will place their loans into a forbearance during the 60 to 90-day consolidation period while we're working to get their loans consolidated. What that means is that for forbearance, as soon as the client executes a contract with you, one of the documents that the client is going to sign is a general forbearance request form. That form, once received, is used by our processing department, and that form is forwarded over to each of the client's lenders to request a forbearance to place their payment into a freeze while we're working on the consolidation, which in turn, since they don't have to make those payments, obviously it makes it a lot easier for them to afford the monthly fee for the consolidation. So for all clients, we will request a forbearance. Not all clients will get granted a forbearance. It all depends on if they have forbearance benefits remaining on their loans. So what that means is that most clients, when they have federal student loans, typically have up to a 2-year forbearance period that they can take advantage of throughout the term of their loan. A lot of clients exhaust their forbearance. Other clients don't. Every scenario is going to be different, but you just want to advise the clients that we will request a forbearance and attempt to get their payments put into a freeze during the 90-day consolidation period so they don't have to worry about the hefty payments that they're trying to consolidate down to a lower payment in most cases, which is also going to be a huge selling point. It's very important for you to know that once the forbearance is submitted to the client's lenders, the lenders are going to send a response directly to your client notifying them whether or not the forbearance was accepted or denied. And typically, once the forbearance request is submitted, they will receive a response within about 7 to 10 business days. Okay? So are there any questions about forbearance in that process, what forbearance is, and why it's beneficial for the client? Good question, John. If the client has exhausted their forbearance, there are other situations that we can try and look into for the client, such as an economic financial hardship deferment. But in most cases, if a client has exhausted their deferment or forbearance benefits, they're not going to be able to have any more. Now, when you consolidate, that can renew their forbearance and deferment benefits, meaning that after the loans are paid in full and they have their new consolidation loan, they can then be eligible to take advantage of forbearance on those loans again because it's a new loan at that point. So any questions about that? Actually, wait, I think you guys have a few more questions up here. Bear with me. Is forbearance ever denied? In some cases, yes. It all depends on if the client has exhausted all of their forbearance benefits, which you can pretty much determine that in your phone conversations with the client. You can ask them, have they ever called their lenders and asked to put their loans into forbearance? Most of them will say yes or no. Don't know if they have or not. And you can ask them, how many months did you have your loans placed into a forbearance for? And depending on what that question is, as long as it's less than 24 months, we should be okay with getting them approved for forbearance. Okay? So are there any other questions about forbearance? Okay, it doesn't look like anyone else has any more questions. So forbearance is pretty simple. Like I said, I'm just going to go recap this. So it basically places current payments on freeze. Or should I say on hold? Which means that they have no payments due while we're completing the consolidation. And then once submitted, it's about 7 to 10 business days for a response from the lender. And again, they'll receive correspondence notifying them whether or not it was accepted or denied. In most cases, we're hoping that it gets accepted, obviously. Now, for those clients who don't have forbearance, here's the thing. You know, you're going to run into a lot of clients who are perhaps their payments are just becoming due. They're running out of forbearance because they've had it in forbearance forever to put the loan payments off. In those situations, you know, it's kind of one way or the other. The client can choose to make the payments that they can't afford, which that's really not an option, or we can just push the consolidation through even if they can't afford the payments that are due while we're getting the consolidation done. Because again, remember the client has a 6-month window before they go into a permanent default where they can still consolidate. Okay, so in the event that they don't have forbearance and they can't afford their monthly payments, well, obviously we don't want to advise them not to make their monthly payments, but if they can't afford them, they can't afford them. That's the reality of the situation. We can still do the consolidation even though they're not making their loan payments, assuming that they haven't gone into a permanent default. Okay, so any questions about that there? Economic hardship letter. What I think you may have confused that with an economic hardship forbearance, but and there's also what's called a statement of financial status, which the statement of financial status is what's used for the rehabilitation process. So the financial hardship that you're mentioning, that is more or less, the economic financial hardship is more or less in the event they've exhausted their forbearance options, we can attempt to try to get them a hardship deferment due to economic reasons, obviously, for them not, you know, not having much of an income or having a lot of expenses, whatever the case may be. We can attempt to still get them in an economic hardship deferment in the event they have exhausted all of their forbearance benefits, okay? So any other questions about forbearance before I move on to the next section here? All right. So I guess we got all those questions answered. So next, let's talk about what it takes to quote a client any of these programs we've gone over. So how do we put together options for a standard, graduated, extended fixed, extended graduated, IBR, ICR, pay-as-you-earn plan, or even a rehabilitation plan for that matter? So with that being said, there are a few things that we need to get in order to quote a client. And this is all information that is going to be entered into the CRM, which that'll be a training that we do tomorrow as far as getting you guys familiar with the CRM systems. So I want to go over what is necessary in order to quote a client different program options for consolidation repayment plans. So bear with me here. So in order to quote a client, we're going to need the following. We're always going to need to know first and last name, we're also going to need their phone number. You're going to need these two things, or these three things here: first name, last name, phone number, to create a file in the CRM. Without this information, you cannot create a file or do anything with that client you're talking to. So it's very important that you know the first name, last name, and their phone number. We also need to know their marital status. And by marital status, what we mean is, are they married, single, simple as that, divorced, whatever the case may be. Tax filing status. And the reason we need to know their tax filing status is so that way we can put together all of the options under the income-driven forgiveness programs. So the Family 2 programs, IVR, ICR, and pay-as-you-earn. And the reason we need to know that is because we need to know if they file a joint, separate, single head of household tax return, and how many children or dependents did they claim. And that's for the income-driven plans. Next, we need to know the total household income. Oh, shoot. Oh, sorry, guys. Hang on here. I don't know if you can see us or not. There we go. We're back. So, total household income. And what I mean by that is, if we have a borrower that's married and files a joint tax return, well, what do we need? We need the total household income for both the borrower and the spouse because they filed a joint tax return. If they are married and file a separate tax return, we only need the borrower's income, not the spouse's, because they file separately. And then if they're single, then obviously you're just going to have the borrower's income. They file head of household. That means typically they're single but have dependents. So, we're going to use the borrower's income in that situation as well, too. We also need to know the family size. And again, this brings me back to, is the borrower married, not married? If they're married and file a joint tax return, well, then we're going to look at the borrower, the spouse, and whether or not they claim any children or dependents on that tax return. So, for instance, if we have a married couple that files joint and has 3 children, we've got a family size of 5, okay? If we've got a borrower that's married and files a separate tax return, and the borrower on their return claims 2 kids, we've got a family size of 3. If we've got a borrower that is single but still has 2 kids that they claim on their taxes, again, that's a family size of 3. So we'll come back to that here in a minute. Now, we also need the FAFSA PIN number. And last but not least, date of birth and social. Why do we need these things? We need the PIN number, date of birth, and social in order to access the client's loan information so we can see how many loans they have, the balances on their loans, the interest rate, the status of the loans, and how many different servicers they have, which is all information you're going to use in your sale. Because if you have someone with multiple loan servicers, well, there's a huge benefit in consolidating right there, because instead of you having multiple loan payments with different due dates, you can have one payment with one due date a month to one servicer. So the FAFSA PIN, date of birth, and social allows us to access all the client's loan info in order to put together a quote for either a rehabilitation, a consolidation, a rehab and a consolidation, or a repayment plan change, depending on the borrower's specific situation when you're talking to them. So, are there any questions about this initial information that is needed in order to put together a quote? Or are there any questions as to why we need this information? No questions? Okay. Now, I also want to go over what is a complete file aside from this initial information that you need to do a quote. So, for instance, bear with me here one moment. Okay. So aside from that information, we also need the following. So after you've quoted a client, gone over the program, and are ready to send out a contract, there's some additional fields that we need to fill out in the CRM aside from these initial things that you gathered to quote the client. So aside from that, let me write this over here, we will need their mailing address, We will also need their email address. We will also need their employer name, job title, address, and phone number. And in most cases, you can look up the employer's address and phone number online while you're on the phone with the client if they don't have that information handy. We also need state-issued ID number, and the state-issued, meaning it can be an identification card that's state-issued or a driver's license that's state-issued. And the reason that we need that is because the federal government wants to make sure that your borrower is who they say they are and not committing fraud upon someone else and consolidating someone else's loans. We also will need 2 references. And the references can be family or friend. They just cannot live with the borrower or live together. And then last but not least, if you have a married couple that files a joint tax return, if their spouse also has student loan debt, you will want to get the spouse's student loan debt amount as well. So are there any questions as far as what is needed for a complete file in the CRM? And before I answer any questions, if you have any, the reason that we need all of this information right here is because this is everything that is needed in order to process a rehabilitation or a consolidation on your client's behalf. Without this information, your file will sit in processing until all of this information is obtained. So it is very important that during your sales call and your pitch, when you're sending out a contract and agreement to your client, that you try to obtain all of this information. And if you can't obtain all of it, obtain as much as you can, because it's less work that processing will have to do to come behind you to try and collect the information that you didn't collect through the sales call. Does that make sense? I hope so. It's to everyone's advantage for you to try to obtain all of this information during your sales call before you send out the contract. So are there any questions about this information that's needed here?
What if both spouses want to consolidate?
Okay, great question. So let's say you have a married couple and both of them have student loans. Well, great. That's 2 consolidations for you. A chance for you to double up on that one phone call. So you can pitch, first what you would do is quote the quote the borrowers, and then you can, after you're done quoting the borrower's information, you would then pull up the spouse's information and do the same thing as if you were running a brand new quote for them. So essentially, if you have, a married couple where they both have student loans, or for instance, you can run into another scenario where you have a student borrower that has federal loans, and you also have their parent who took out Parent Plus loans for the student to go to school. Well, that scenario there would also be 2 consolidations because the parent has loans tied to their social as well as the student having loans tied to their social. So you're looking at 2 separate consolidations for a scenario like that. Any questions about that?
Now you're looking about banking.
Banking.
You don't need banking for quote, but you do need it, to consolidate.
Okay, so as far as banking information, we don't need the banking information to run a quote. The only thing that the banking info is used for is to obviously charge the client our monthly fee, or our fee for consolidating, or for rehabilitation, or for a repayment plan change. Did that answer the question about banking?
Does it matter how they file? That's a different question.
Can you clarify what you mean by does it matter how they file?
I'm going to turn it on.
Is it Maddie?
Okay. What I mean is when you say it counts as two consolidations, if they file jointly, is it still two or is it one? Or if they file single, obviously that's two.
Okay, so if you have a married couple and they both have loans and they both want to consolidate, okay, if they are married and file a joint tax return, it's still a family size of two. So you're gonna basically look up the let's say the wife's loans, for instance, okay? You're going to look up their loans, quote them based on all the information that we would obtain to run a quote for them. So if it's a married couple with a family size of two that files, with two children or dependents, and if they file a joint tax return, well, you're going to have a family size of 4 there, and you're going to use their combined income when quoting the payments for the wife's loans, and you're going to use the same information as far as the husband's loan, except it'll be vice versa. You're going to have the husband's and the wife's income and still a family size of 4 because they do a joint tax return and have a family size of 4 with their 2 children or dependents. Does that make sense?
Yes.
I guess did that answer your question and clarify that?
Yes, because then if they're filing single, then it's the same thing except it's whatever the difference is in family size and the information of the spouse.
And their separate incomes, right. So if they're married filing separate on like the wife's, quote that you put together, you're only going to use the wife's income, and if the wife claims one of the kids, it would be a family size of 2, and the wife's income that would determine the payments under the income-driven programs. And then same scenario, if it's the husband and they file a separate return, you're only going to look at the husband's income and however many dependents that the husband claims on his portion of the taxes, okay?
Okay, so then my other question is, earlier they were saying that if, okay, let's say 2 people are filing jointly and they're married, and the spouse has student loans, and so that offsets the spouse's income. So then the question I have about that would be, actually, I don't know. Never mind. Okay. If I figure it out, I'll ask.
No, I think I know where you're going with that. As long as they're a married couple filing jointly, okay, if they both have student loan debt. So, for instance, for the wife's quote that you would put together, you're going to use their combined adjusted gross income and family size, and you're also going to enter in however much student loan debt the husband has, so that is taken into account when quoting payments for the wife's loans. And then we would take the husband's scenario, same thing, since they're married filing a joint tax return, we would basically look at their combined adjusted gross income and family size, and then we would keep into account the wife's student loan debt as well when quoting the payments, okay?
Okay, perfect. And the system will automatically do that. We just need to input the information, right?
Exactly. As long as you have the information inputted correctly into the system will do all the hard part for you, okay?
Okay.
So any other questions about that? No other questions? Yeah. Okay. So that's initially what we need for quoting and for a complete file. And again, I want to reiterate to you guys, or to all of you, it's very, very important that you try and you fill out everything in the CRM as thoroughly as you can, just because it's less that we're going to have to go back and collect from the client during the processing period, okay? Which ultimately is to everyone's advantage, because the sooner we get that stuff in, the faster we can start working on it, completing the phases, ultimately collecting everyone's money, okay? So that's essentially what we need for quoting and to obviously process a rehab or a consolidation for a complete file. Now, when we are sending out contracts to clients, there's some necessary documents that are needed depending on what program the clients are enrolling into. And I want to go over that with you guys next so you're familiar with that. Okay? I'm not sure, did Mike touch on that, Sean?
You touched, I was going to say something about the official appeal a little bit, how they use that